So you'd like to buy some ETFs, but how do you know which ones are the right ones to buy and which ones are the ones that you should be adding to your portfolio? In this video, I'll go through the way that I personally research ETFs before I purchase them. All aboard the passive investing ETF train. Choo choo! And it is very important to note that I'm not a financial advisor and I'm not a professional investor. I'm just taking you through the way that I personally research ETFs before I invest in them. But first, what exactly is an ETF? ETF stands for Exchange Traded Funds, and it is quite a cost-effective way to buy into some of the world's top companies and also into a market tracking index. ETFs are basically a bundle of shares that can be bought and sold on the stock exchange like an individual stock. But instead of just purchasing one share, you're purchasing numerous shares of some of the world's top companies. And the benefits of investing in ETFs is because you are investing in multiple different companies, your risk is diversified. So it is less risky than purchasing an individual stock because individual businesses are quite susceptible to really big fluctuations in the market, whereas the market as a whole generally tends to go up year on year. So the reason why people purchase ETFs is so that they can be a passive investor and essentially just dollar cost average into these ETFs so that they can get the average returns of the market. And the average returns of the market over the past 100 years has been from 7 to 10% per year. Of course, some years it could be higher and some years it could be lower. But just as an average, it is from 7 to 10% if you do hold on to it for the long term. So now we know a bit more about what ETFs are and the reasons why people invest in ETFs. Let's get into some things that we should consider before we purchase ETFs. So one of the things that I think we should all consider before we purchase ETFs is what our strategies and our goals are with our investing. For example, are we looking to become more of a passive investor and just get the average returns of the market so we can just dollar cost average into our ETFs? Or perhaps, are we looking to be more of an active investor? And are we just investing in ETFs for a bit of diversification in our portfolio? Another thing which is important to consider is the time horizon that we would like to hold these ETFs for. Is it from 5 to 10 years or is it from 10 to 30 years? All of these things really do play a big part in what kind of ETFs we should consider. So some of the biggest ETF providers in the world are BlackRock and Vanguard, and these are two of the most popular ETF providers in the world. And in Australia, we also do have BetaShares, which is another ETF provider. And the differences between these different companies is basically the types of products and ETF products that they provide. Some of them can be quite similar, but there may be a few slight differences between the different ETFs that they do provide. So the first thing which may be different in the different types of ETFs that they do have available is whether it is an active or a passive ETF. So an active ETF means that there will essentially be a team or a manager who is looking over the top holdings in that active ETF. And this person or this team will make decisions on the allocation of that ETF. Actively managed ETFs do sometimes benchmark themselves against an index, for example, the S&P 500 or the ASX 200, but sometimes the returns may be slightly different depending on the sector allocation that this actively managed ETF or management team has chosen. So it may not perfectly match the index that they are benchmarking themselves against. Another type of ETF is a passively managed ETF. And a passively managed ETF essentially just tries to replicate the performance of an index, for example, the S&P 500 or the ASX 200. So the goal of a passive ETF is to essentially replicate the exact same movements of the market index that they are tracking. So I think it is important to weigh up the pros and cons of whether you would like to go for an actively managed ETF or a passively managed ETF. So the next thing that I do like to have a look at before I purchase an ETF is smashing the like button on this video if you are enjoying it and finding some value from it. I would really appreciate it, and make sure you do subscribe to this channel for more videos about investing and personal finance. So something else to consider when you are purchasing ETFs is the industry allocation, and you can find this on all of the major websites. As you can see here on the Vanguard website, if you are looking to purchase this particular ETF, it will actually show you the different industries which make up this ETF. And it is important to have a look at this because if there is a bit of an overweighting in any one industry, it means that there is slightly more risk because particular industries may go through booms and busts. So it may mean that your portfolio may fluctuate quite a bit if it isn't well diversified in a range of different industries. And on the flip side, if you are particularly bullish on a particular industry, I think it is important to have a look at the industries comprising this ETF, because then you can start to make a decision on whether these industries are industries that you personally would like to invest in, if it is part of your investing strategy. With some actively managed ETFs, they may be buying into particular industries which may really grow in the future. For example, there is an electric vehicles ETF which I did recently purchase a couple of weeks ago, and the reason why I decided to purchase an EV ETF instead of picking individual EV stocks is I figured that I would like to have exposure to the EV space, but I'm not quite confident yet picking individual stocks in the EV space to invest in. So I decided to purchase an EV ETF, and in this EV ETF, it is actively managed, which gives me a bit of comfort because I think for me personally, it is good to know that there is a manager who is actively having a look at the performance of all of these companies and kicking out any companies from that ETF which don't really perform well over time. Another thing which I like to look at is the different countries that make up the ETF. I do like to have diversification in my portfolio, so I do like to have a look at the different countries that make up each ETF and see if it fits into the portfolio that I am trying to build. For example, if my existing portfolio does have quite a big weighting towards American markets and US stocks, then I may start to look at ETFs which do have a bit of a weighting in different countries, so I can get a bit more diversity in my portfolio. Another thing to consider is the management fees of ETFs. So each ETF provider does have slightly different management fees, depending on all of the things that I've mentioned, and particularly if it's an actively managed ETF or a passive ETF. Passive ETFs generally do have a lower management fee, and actively managed ETFs do tend to have a higher management fee. Of course, because with actively managed ETFs, there will be somebody constantly checking the portfolio and allocation of that ETF and making changes as they see fit. So of course, there is quite a lot more time involved. So sometimes with actively managed ETFs, you can expect a higher management fee. Whereas with passively managed ETFs, since it is just trying to replicate an index and there's nobody really making decisions on behalf of the different portfolio allocations, you can expect these passively managed ETFs to have lower management fees. So this is definitely something to consider before you do start investing in any ETF, because the higher the management fees, essentially the more returns you need to make in order to make your money back. And these management fees can really compound over time. So if you are tossing up between two very similar ETFs, something that you can use to narrow down your choices is the management fees, because this will have an impact on the returns of your portfolio. So something else I like to consider before I purchase an ETF is the performance of that particular ETF over time. It is important to mention that past performance doesn't indicate future performance, but I do like to see the past performance of an ETF to see how it has been performing over the years. And also just to make sure that I do have enough historical data to make a judgment call on. I generally don't really like to purchase ETFs that have only recently been listed because I don't have a lot of financial data to have a look at and a lot of past performance to have a look at. Generally, I do like to purchase ETFs that have been growing quite a lot year on year and have produced pretty consistent returns over time. So if you are weighing up different options between ETFs, I think that past performance is another one to definitely have a look at. And you can find past performance of an ETF on the website of the ETF provider. It will generally give you a 1-year average, 5-year average, and 10-year average. So this can help you make your mind up between which ETF you would like to go along with, since ETFs can be slightly different depending on the different industries, sectors, and management fees that they do provide. So the final thing that I do like to have a look at before I purchase an ETF is the top holdings in that ETF. And the top holdings are essentially the top companies that make up that ETF. I think it is very important to also align your investing strategy with your values as well. So having a look at the top holdings in any ETF is something that I really like to have a look at, because essentially when we are investing in businesses, we are handing over our hard-earned money to these businesses in the hopes that they will grow and thrive in the future. And for me personally, I only really like to hand over my money to businesses that I really believe are doing good things in this world. So having a look at the top holdings in any ETF is something which is personally very important to me. And some of the ETFs which I've personally invested in include Asia, which is the BetaShares Technology Tigers ETF. And this ETF comprises of 50 of the biggest tech companies in Asia. So some of the top holdings in this ETF are Alibaba, Tencent, and Samsung. The reason why I like this ETF is I do like to have exposure to the Asian sector, and I do think that the Asian technology sector does have a long way to grow, because internet penetration in Asia isn't as high as in Western countries. So I do think that this industry will really grow and thrive over the next few years. Another ETF which I've also purchased is NDQ, and NDQ holds 100 of the biggest tech companies on the Nasdaq. So similar to Asia, it is a bit more of a technology focused ETF, but since my values are more aligned with technology businesses, and this is an area that I am very passionate about, I am happy to have more exposure to these different industries. So the top holdings in NDQ include Apple, Microsoft, Amazon, Tesla, and Facebook. And there are quite a lot of big other tech companies which do make up this ETF. So with those two ETFs, my strategy is generally to just dollar cost average into those ETFs, because they are quite well diversified, and I am happy to have quite a significant portion of my portfolio invested in those ETFs. But I do have a couple of more niche ETFs, and these are more actively managed ETFs. And another more niche ETF I purchased is the iShares Self-Driving EV and Tech ETF. The management fees for this ETF is 0.47%, and the top holdings in this ETF include Tesla, Intel, Alphabet or Google, Samsung, Toyota, Nvidia, and more. So I hope you enjoyed this video and a look inside the reasons why I choose different types of ETFs and the different things that I consider before I purchase an ETF. If you did like this video, make sure you give this video a thumbs up and subscribe to this channel for more videos about investing and personal finance. And by the way, I've also got a link in my description below to ShareSite, which is a free tool that you can use to add in your different investments and track your portfolio over time. And if you do sign up with my link, you get an extra free month on the Pro plan. So make sure you check out the links in my description below. I'll see you in the next video. Bye! And if you'd like to see more videos, I've got some links to some videos here. So make sure you click the links and click through to another video.